Welcome to the Roy Morgan Weekly Update. During the Easter break, the Roy Morgan poll recorded a boost in support for the Labor government, up 1% to 51%, ahead of the coalition on 49% on a two-party preferred basis. Although Labor increased its lead on a two-party preferred basis, this was due to the increasing strength in support for the Greens and their preference flow to Labor. Support for the Greens increased 1.5% to 15.5%, the equal highest support for the party since the last election. This increased support for the Greens comes as the party continues to move away from focusing on environmental issues and has been very vocal in talking about housing issues impacting many Australians. Support for the Greens is highest in Victoria, 17%, Queensland, 18.5%, Western Australia, 15%, and Tasmania on 20.5%. The Greens recorded their lowest level of support in New South Wales at only 10.5%. The problems for the government are illustrated when looking at the primary vote. Support for the ALP was actually down this week by 1.5% to only 30%, but support for the coalition was also down by 0.5% to 37.5%. There were a further 17% supporting independents and other minor parties. That's up 0.5% from last week. So the overall picture on primary vote is that electors continue to move away from the major parties to the Greens, independents and other minor parties. And the rise in support for the Greens and other minor parties and independents means if an election were held now, the Albanese government would be re-elected, but it would be relying on the support of the Greens and Teal independents to form government. The other key indicators were not good either for the Albanese government this week. Government confidence was down 4.5 points to 75.5, well below the neutral level of 100, and the lowest rating since November 2023, just after the last interest rate increases. Now, only 30% of Australians say the country's heading in the right direction, while the majority, 54.5%, say the country's heading in the wrong direction. Consumer confidence, the ANZ Roy Morgan Consumer Confidence was virtually unchanged at 82.8 this week. It's down 0.3 points. Consumer confidence has now spent a record 61 weeks below the level of 85. Looking back over the last few months, consumer confidence has now moved in a narrow band of 80 to 85 over the last 17 weeks, since early December. However, as we must keep reminding ourselves, although the RBA haven't increased interest rates since November last year, the momentum in mortgage stress and cost of living pressures continues unabated, keeping a lid on consumer confidence. Inflation expectations increased again for a second straight week, up 0.1% to 5.2%. So Australians now expect annual inflation to be 5.2% over the next 2 years. Like consumer confidence, inflation expectations have stayed within a narrow band of 4.8% to 5.3% since early December. This is the first time this year inflation expectations have increased for 2 weeks in a row. The renewed rise in inflation expectations this week is unsurprising given the recent high price of petrol. Average retail petrol prices in Australia have now spent a record 38 weeks, more than 8 months, above $1.80 a litre. More recently, since late January, average retail petrol prices have averaged $1.98 per litre. The third Roy Morgan poll of the new year shows a strengthening in support for the new National-led government. In February, 56% of New Zealanders supported the new government led by National leader Christopher Luxon, up 1% since February. Within the government, support for the National was 38%, ACT 11.5%, and New Zealand First 6.5%. In March, support for the parliamentary opposition was down 0.5% to 40.5%. Support for Labor was 23%, the Greens 13.5%, and the Maori Party 4%. Despite improving political support for the government, March was not a good month on the economic front. In mid-March, Statistics New Zealand announced the country was in its second recession in 18 months, with an economic contraction confirmed for December quarter 2023. The economy shrank by 0.1% in that quarter and 0.3% in the previous quarter. The news of the recession contributed to sharp falls in two economic indicators, government confidence and consumer confidence, which both plunged in March. Roy Morgan New Zealand government confidence dropped 17 points to only 81, and the latest ANZ Roy Morgan consumer confidence was down 8.1 points to 86.4. Both of these results are well below the neutral level of 100 and clearly the lowest since the election of the new government in October last year. Although electors are currently giving the new national-led government the benefit of the doubt about their policies, the big falls in government confidence and consumer confidence are a clear sign that New Zealanders are not happy and want to see improved economic outcomes going forward. The interesting thing is that many of the pressures facing the New Zealand economy are similar to those we face in Australia, with high immigration keeping the economy afloat, but contributing to other pressures like increased housing costs and rental shortages. These results must be a huge concern for the new Prime Minister, Christopher Luxon, only 4 months into his term. And that's a wrap. Thanks for your interest this week in Roy Morgan's latest results, and I'll be back next week to bring you the most up-to-date readings on consumer confidence, inflation expectation, voting intention, and business confidence.